It's time for the Chicago Real Estate Beat here on 1340 WJOL. Here's Ken Houbolt from Houbolt Real Estate, Ray Graylick of Graylick Insurance, Timmy Yanahan, the mortgage man of Caliber Home Loans, Kevin Barry from the Barry Law Group. This is the Chicago Real Estate Beat on 1340 WJOL.
Welcome to another edition of Chicago Real Estate Beat, brought to you by the accounting firm of DeAndre and Associates. This segment is brought to you by our friends at Chicago Title. Let's say hello to the crew today. We've got Ray Graylick from Graylick Insurance.
Welcome to the show, everyone.
Timmy Yanahan's missing. Man, maybe he might be on the phone. We'll talk to him in a moment. And then we got Kevin Barry from Barry Law Group.
Hello, listeners.
And I'm Ken Houbolt with Houbolt Real Estate. Timmy, you there?
Yeah, I'm here, guys. What's happening?
You playing hooky, Tim?
Little hooky. I'm hitting some golf balls, those little white things that I can't hit very well. Over at the FOP outing, we're supporting our Fraternal Order of Police here at Cog Hill in Lamont. And great day. Got Joey Logan here with me from Chicago Title and Kerry Pastore for Caliber Home Loans. Supporting our guys and with our CREN team, Chicagoland Real Estate Network.
So we're the only ones doing the work today, as usual. Is that the way it goes, Tim?
Well, you guys are usually used to pulling the load, you know. That's what I'm doing for our foursome right now.
Yeah, but I want to know how many strokes they're giving you.
Well, we're taking a few, guys.
Hey, well, Timmy, you guys have a great day out there. Thanks for supporting the FOP. The guys, all the members of CREN appreciate you guys going out there and representing us. Hit them straight and make sure you take an Uber home in the way, you know, whatever your beverages are of choice.
Timmy, keep that foot wedge in the bag.
You know that's there, but all right, have a good time, team.
Thanks, guys. See you later. Hit them straight.
Thank you. Bye-bye.
You too. So, what do you got for us this week, Kev?
Today I'd like to talk about capital gains tax. Unfortunately, the IRS is involved in real estate transactions, as we know. One question I get often is, do I have to pay capital gains? And the answer is maybe. There is a 4-question litmus test that we have to go through in order to see if capital gains tax is due. Pretty simple. And maybe for some listeners who have bought real estate in the past and, you know, maybe somewhat older, there used to be a over 55 one-time exclusion. That has been eradicated, it no longer apply. So what the new test is you ask yourself 4 questions. Number 1 is, have you lived in this property as your principal residence for at least 2 out of the last 5 years? So again, it doesn't have to be all 5 years, just 2 out of the last 5 years. If the answer to that question is yes, you go on to the next one. Next question is, have you sold a principal residence in the last 2 years? So far, so good. You go on to say whether this property has been a business or rental use. So if this was a 2-flat you're renting out, you're not eligible for the exemption. And the last one is, if you gross more than either $250,000 for a single filer, so if you are single or you file single,
like Ray over here, big money.
The IRS, it's $250,000. If you are a joint filer with the IRS, the question is, have you grossed more than $500,000 in a transaction? So if those questions are yes, it's 2 out of the last 5 years. You haven't sold in 2 years. It's not a rental or business property. You didn't gross more than that. You are exempt. So a lot of people break it down as every 2 years you could basically sell a principal residence without capital gains tax, provided you're not making more than that gross amount. In the event those questions aren't true, or all 4 of them, you potentially may owe capital gains tax. Now, that's a wide range of taxes. Capital gains tax can go from anywhere from 10% to 39.6%. So, again, wide range, and it's all based upon your income. The lower the income, the lower the tax. So it starts at, if you make under $10,000, you're at 10%. It goes all the way up to making more than $481,000, you're paying almost 40%. So that's a big discrepancy. The other thing that people forget about is, and this is why I tell people, keep your receipts, capital improvements. People tend to forget about that. So you could be there a long time owning the property, and you've improved the property as far as putting on a porch, addition, renovating a kitchen, finishing a basement, against that possible capital gain. So let me give you a quick example. You buy a property years ago for $100,000. You're selling it for $200,000. You're exempt because of dollar amounts. Now let's say you're buying a property years ago for $250,000 and you're selling it for $600,000 and you're a joint filer. Potentially that's a gain. But what you could do against that $100,000 gain is write off any expenditures for capital gain. So it's something to keep in mind. I get asked often. Number one, you can't avoid it. If you're not eligible, you have to pay it. But a lot of those things are factors you want to think about when you're selling a property.
Good stuff. That's one of the things the listeners may want to take heed to is that we, as a network, nation for you too, we constantly are calling one another when we're in the transaction concerns. Unfortunately, it didn't go to Ray, but yet the tools were there in order for us to make the decision. So, like Kevin talking about capital gains is important for all of us on there too. So, Kev, we appreciate that. Ray, what do you got for us?
Well, that's really good stuff, Kevin. Thanks for the information. Tonight or this afternoon, I want to talk a little bit about 7 homeowners insurance coverages I would recommend that any homeowner should make sure is on their homeowner's policy. And first of all, when it comes to homeowners insurance, not all policies are created equal. And it's important to remember, folks out there, that when it comes to protecting what could very well be your biggest asset, it's important to make sure you're dealing with a professional insurance person who, has the right tools, the right companies, and the right coverages for you. And we'll talk about that a little bit. I think the first thing you might want to make sure you have is the right limit on your homeowner's insurance. You need enough insurance to let you rebuild the home in case there's a total loss.
It's different than market value, correct?
Absolutely, Ken. Market value is totally different. Market value is dictated by, the competitive pricing in that area. But as far as replacement costs, and I've talked about this on previous shows, something totally different. One thing to remember also, folks, is, when you do any sort of upgrades to your home, you finish your basement, you add a second story, you do a room addition, you do something like that. It's important to remember to, after that home improvement project's done, always report any of those improvements as soon as possible to your insurance company so they can adjust your limits. And the next thing I think is very important is to make sure that you're carrying replacement costs. Too often we see clients come into our office from companies that, their recommendation was to, kind of save a little bit of money and, sell a policy that has, actual cash value. Now, the difference is when you have a guaranteed cost replacement policy, you can rest easy knowing that your home will be rebuilt exactly to the way it was prior to the loss, without worrying about depreciation, policy limits, or insurance construction costs.
Ray, one thing I know I can add to that is I come across this all the time. Obviously, when you buy a home, they're buying insurance to cover that home, like you mentioned. In the scheme of things, it's probably the best bang for your buck. You could spend anywhere from $600 to $1,200 for homeowners insurance per year. And I tell you, your house burns down, they're going to completely rebuild it from scratch. And,
absolutely, Kevin.
It's the best bang for your buck as far as insurance goes.
Yeah, and I think that anybody who's walking around with an actual cash value replacement or neglecting to have the replacement cost is really running around and playing roulette because, if something happens, especially a disaster, they'll be caught holding a large loss. Next, I think that a lot of people would have to make sure that they have enough liability coverage. Your homeowner's liability coverage protects your assets in the event someone gets hurt on your property. It also offers coverage for some incidents that happen away from your home as well. So I think what's important, lawsuits aren't as uncommon as people might think.
Again, can I add that, Ray? Because personally, I encounter this as being a business owner, like all of us are. I always recommend to my clients about an umbrella policy. They're very inexpensive. You can get $1 million umbrella policy that kind of covers anything above your homeowner's policy. So if you're in a situation like that, please consider that because I know it's a level of comfort. Yeah,
fantastic point, Kevin. These are additional limits of liability coverages. They're very affordable, and people kind of, they don't have them mainly because they don't know these coverages exist, and mostly because their insurance professional isn't making these sort of recommendations. Yes. The next thing is loss of use. I think people don't understand what it means, but if your home was a total loss and it became uninhabitable as a result of the loss, you would know that you'd have extra expenses to be able to live somewhere else for the time that your home was, being rebuilt. It could either be a stay at a hotel, you can rent an apartment or a home, and people would very much need this coverage. Lastly, I think we're talking about endorsements that can customize your coverage. Everyone's risk factors are different. That's why you want an option of either adding, depending where you live, earthquake coverage, inland marine coverage, high-value items you may own like jewelry, watches, furs. There's only certain limitations on homeowners policies. Other important coverages that people might need is flood insurance if they're in a floodplain. Other people may need separate policies for sewer and drain backup if they have a covered basement. So I'd make sure you recommend talking to your insurance professional about that.
Ray, what do you tell your clients regarding that personal property? Because I've run into situations that they are claiming they have multi-million-dollar jewelry, furs. How do they do it? I mean,
Ray's got a lot of furs, and you see him walking around with
It was a little cold today, so I put one.
Videotaping, is that something
that's a great idea. Photos, videotaping, and obviously leaving those photos, those videotapes, those receipts somewhere else, not in the premise. Because in case the house burns down, you've got this instantaneous proof. And recollection's a big thing, Kevin. We've had some big claims where people came home after work, their home was destroyed. It's happened twice in my career, and you're going through room by room, and without a contents inventory, it's rather hard to recollect. And months later, they're remembering items that were in rooms because they just, they forgot, and your state of mind is totally different after loss like
time.
that. Absolutely. And I think also you need a reliable deductible. Many homeowners recovering from a disaster such as a big loss get a sticker shock when they learn that their deductible isn't a dollar amount that they choose. Some insurance companies out there, and folks, they're out there, they're giving percentage deductibles. And a good example of that is, you might have a policy that has a 5% deductible. Now, if you have a $200,000 dwelling coverage on your home, 5%, it's $10,000 deductible. So if you have a loss like a roof that gets blown off your home, that roof may be only about $10,000. So now you're going to absorb the entire loss. So make sure you understand when you're picking your deductible that, number one, that you can afford that deductible. It's not going to change your life in the event of the loss. And lastly, I think you need the backing of a financially sound company. So good. There you have it, guys.
Those are good points. Thanks, Ray, for sharing that with us, too. I wanted to share with you guys the fact that tomorrow I do have a closing out here in Joliet.
Hey.
We are going to be over at Chicago Title in Joliet. We're going to be closing the property 312 there that we listed about 8 weeks ago. I want to give a special shout-out to Joe Contreras from Carges Real Estate for bringing his buyer in. It was a pleasure to work with Joe, and also to George Pena from Old Second National Bank for providing the financing on there too. So wanted to share one of the listings that we still have available, which is an investment opportunity over on Richard Street, 832 Richards. It's 2 buildings, a 2-flat and a 4-flat being sold together as a package deal. Excellent ROI, listed for $260,000 for both buildings. Contact me for more information. And I also wanted to let the listeners know anything you need when it comes to us doing business out here in Will County, we're here to help. As you can see, we've got a closing tomorrow. We've got some other listings here. We have more coming. So whether you need insurance, whether you need law, whether you need financing, we've got the team in place that can do that for you. So go to our website, CREN, Chicagoland Real Estate Network, CREN.biz, and all our contact information is there, and feel free to contact all of us there too. So want to talk about what else is coming up on today's show. We're going to share some tips to secure financing on investment properties. We've been having a lot of people call all of us talking about investment properties as rental market continues to go up. Also commercial properties on there too. So we're going to help out. Hopefully that'll help out. And then finally, Tom Brennan from All-in-One Building and Design will be joining us to talk kitchens and baths after that too. So we're going to take a break right now. Thanks to Chicago Title for sponsoring that segment. You're listening to the Chicago Real Estate Beat, brought to you by the accounting firm of DeAndre and Associates. It's 1229 on WJOL, Will County's News, Talk, and Sports. We'll be right back.
Houbolt Real Estate is your full-service real estate brokerage firm. Whether you are buying or selling residential or commercial, Houbolt Real Estate can help you obtain your goals. With over 25 years of local expertise, Houbolt Real Estate has the knowledge and expertise to deliver your desired results. Our team has been exceeding the goals of families and companies since 1991. Call today to put the Houbolt Real Estate team to work for you. Call 708-220-7613 or check out HouboltRE.com. Houbolt Real Estate will exceed your expectations.
Graylick Insurance Agency is an independent insurance agency representing several companies in auto, home, commercial, and workers' comp insurance. The cornerstone of our agency is our ability to tailor-make policies and provide insurance choices with top-rated insurance companies. The Graylick Insurance Agency is your one-stop resource for all of your insurance needs. We put you first and work within your budget. Contact us today at 773-284-7650, GraylickAgency.com.
Official rules for 1340 WJOL. No purchase is necessary. All contestants must be 18 years of age or older to participate unless specified in contest rules. An individual may win an ongoing contest every 30 days per household from WJOL in Crest Hill. All state, local, and federal and other taxes or other fees for prizes awarded are the sole responsibility of the winner. Prizes valued over $500 will be issued an IRS Form 1099 to report their winnings. All prizes are awarded as is. All entrants and winners agree that the station, Alpha Media LLC, and their affiliates shall have no liability and should be held blameless for any injury, misfortune, or damage to either persons or property insured by entering, participating in, winning, or losing any contest by use or non-use of any prize received. All entrants and winners agree the station may broadcast or publish their name, city of residence, photo, videotape, film, or any other likeness, including their voice, recorded or live, for any reason the station deems necessary, without compensation. The radio station reserves the right to change the rules for any contest at any time without notice, and limit the amount of times an individual may enter a contest or drawing. The radio station will not be held responsible for busy lines, bad connections, disconnections, computer malfunctions, lost, late, or misdirected email, faxes, or any other circumstances. Get a full list of contest rules at WJOL.com.
Caliber Home Loans Incorporated, NMLS 15622, is an equal housing lender and an Illinois residential mortgage license number MB0004043. 1431 Opus Place, Suite 135, Downers Grove, Illinois 60515. Not all customers will qualify. Other restrictions and limitations apply.
This is the Chicago Real Estate Beat on 1340 WJOL.
Welcome back to another segment with Chicago Real Estate Beat. Want to thank DeAndre and the associates for sponsoring our show. And we also want to thank our good friends over at Chicago Title as well for sponsoring this too. So before we went to break, we were talking a little bit about investment properties. And you guys, what are you seeing in your business on the law side? What are you seeing as far as investments, people buying and selling?
Well, I think the market's on uptick. I know that some people have some funds to be put into investment property, and it's another way of building retirement. For some money down, you can access some rental properties. Now, the two downsides I see about it, and mostly it's an uptick, but the couple things you want to think about is, have you done it before? Because if you're buying investment property, are there going to be tenants? Ideal on my end with the legal side. Unfortunately, the back end where things don't go right. But I would say one thing is you want to screen potential tenants. You want to do a credit check, maybe even buy some sort of report as far as any judgments against them. So do your due diligence. It's just not as easy as putting money down, buying a property, and collecting rents. Something to think about on the beginning side of an investment property. So that's a tip or two that I would have from my end.
How about you, Ray, on the insurance side?
Well, in terms of insurance, what we're seeing are a lot of insurance companies who are, kind of being picky and choosy a little bit about what type of commercial properties they want to insure. Obviously, the older the properties, the more they want renovations done. The newer the properties, everybody wants to eat that part of the market up. But what we're seeing is a lot of competition. That segment of our business is picking up dramatically. As a matter of fact, what helps us the most is, sure, we can write a lot of lesser's risk coverages, a lot of landlord policies, but a lot of times when you have a business owner that's operating their business out of that property, it's a totally different sort of animal then.
Sure.
Absolutely. Too. One of the things you see now in the market is we continue, we talk week in and week out, is that the number of houses that are available are not selling the way, are not available the way they have been in years past. Therefore, you're seeing, we talked about last week, the condo and townhome market, those prices are dramatically increasing. As that continues, there's also the need for more apartments. And as we've encountered over the past few weeks, we got people building apartment buildings and whatnot too. So, and buying. So when you go for financing like that, when Timmy from Caliber Home Loans talks about the housing and stuff, the loans that we talk about on a regular basis, it's a little bit different in there. So we thought we'd give 5 tips to secure financing for investments property.
There's a nice article by Jennifer Acosta from Bankrate.com talks about these 5 tips, and she says for some housing markets have crashed and become distant memories, but home prices are looking healthy again. But does that mean there are good opportunities for investing in residential real estate? Home values are climbing in most places. According to the National Association of Realtors, 85% of major metro areas saw gains in prices for existing single-family homes during the first quarter of 2017, while 14% saw price declines. But while the interest rates remain low, the tightened credit market can make it tough to secure loans for investment properties. And she talks about 5 tips that can boost your chances. And the first one is to make a sizable down payment. They talk a little bit about since mortgage insurance won't cover investment properties, you'll need to at least put down 20%. And I think, Ken, you could probably contest to the fact that people are putting down 30, 40% to make these deals work, right?
Yeah, definitely, too. You know, the interest rates are typically different than your mortgage on your house like that too. So they're a little bit different on there too. So you're going to see that they require at least 20% to put down on it too. We're going to talk about another tip in a little bit about that's where it could help you out. But mostly it's 20 to 25% down.
You know, it goes on to say if you don't have the down payment money, you can try to obtain like maybe a second mortgage on the property, but it's likely to be a real uphill struggle.
Yeah. Another tip she gives, Ray, is about asking for owner financing. A lot of people don't know what that is or how to do it. Owner financing is where you go to the owner to seek financing in lieu of going to a bank. Back in the day, that wasn't used much. For, again, older listeners, back in the early 80s when interest rates were astronomical at 17, 18%, it was used frequently. Nowadays, where the market collapse has caused some credit problems with buyers who have decent income, but their credit is shot. So don't be hesitant to go to an owner and ask for financing. What happens is they take the role of a lender. They would charge an interest rate. You pay them directly. Typically, there's a short term that they want this owner financing. So you may have a situation where you're paying a monthly a fee to the owner for 5 years, and you have a stated price where after the end of 5 years, you are going to cash out and buy the property for a stated amount. And the goal is during that 5 years, you repair your credit. But this does take 2 to tango because the sellers have to be willing to do that. They may have situations where they can't. They may need cash out to buy something, etc. But when it aligns, it is a useful tool to use for buyers who have good income and not so good credit.
You know, it sounds like people who want to do that really have to sell the seller on owner financing and themselves.
They do, and you be ready to prove your income status because that's a big deal.
Another tip that Jennifer Scott goes on to talk about is this shy away from big banks. And I could tell that, you know, in my experience of dealing for the past 25 years of dealing with commercial properties is this couldn't be truer, especially on, you know, things that are $5 million and below. You're better off going to a neighborhood bank because they're going to know the area. They're going to know what properties go for. They know how they appraise out. They're going to know the profitability, the ups to the downs, and they're going to help you out with that too. So whether you're building or whether you're buying an existing structure, they're definitely going to help you out there too. They go on to say that mortgage brokers may be another option because they have access to a wide range of loan products, but do some research before settling on that one as well too. So what is their background? Do they have a college degree? Do they belong to any professional organizations? So just like we always talk about with everything, make sure you're dealing with somebody that's professional and reputable on there too. So that's important when you're looking for that. So remember your local bank to help you out.
You know, folks, also try to be a strong borrower. You know, although many factors among them are loan-to-value ratios and lender policies, they often influence the terms of the loan. Check your credit score before attempting to make a deal. They say that below a score of 740 can start to cost you additional money for the same interest rates. A below 740 score, you will have to probably pay a fee to have the interest rate stay the same. That range could be from a 1/4 of a point up to 2 points to keep the same rate. So, you know, the alternative to paying points if your score is below a 740 is to accept maybe a higher interest rate. Many people are doing so. And having to, in addition, having reserves in the bank to pay all your expenses, personal and investment related, for at least 6 months has become part of the lending equation. This article goes on to say if you have multiple rental properties, lenders now want reserves for each property. That way, if you have vacancies, you're not dead in the water, and that's a really good point.
Yeah, and then the last point that she makes a tip from Jennifer regarding the securing financing for investment properties: think outside the box, be creative. People sometimes, at the first time going through, they figure they have to have cash in the bank, and that's their down payment. Well, use other sources of funds. Think about a home equity line of a property that you own. I've known people who've leveraged against life insurance policy. Even through, this may sound really strange, but maybe a credit card advance if that's what it takes. So that's something you need to be aware of, is be creative. If the deal appears good, do whatever you can to get that, maybe even a private loan. Family members are always good to resource if you can keep a good relationship with them.
Well, if you think about it, I mean, some people have credit cards at lower interest rates. I mean, some might be, at under 5%, which is less than the interest rate on a loan. So, I mean, if you've got that borrowing power, you may as well take it and use it to your best advantage instead of going out there and trying to kill yourself over this. And also, obviously, like you say, Kevin, if you got a rich uncle like you, maybe he'll borrow you some money.
Ken, by the way, speaking of investment property, what's the inventory out there for these type of properties?
Depending upon commercial properties are, I would say it's steady status quo on commercial properties on there too. But I would say definitely on the residential rental side, primarily I'm talking about 2 to 4 flats and then 5 and greater units on there too. There's not a lot out there because they are great investments right now, and it's definitely a seller's market, similar it is way to the residential market as well in there too.
I couldn't agree with you more, Ken. On my street, West Archer Avenue on Chicago's southwest side near Midway Airport, probably 18 to 24 months ago, there was a ton of commercial property that was for sale, and a lot of it was with some of it had sometimes a residential component in the rear, but other mixed use. But now everything is taken. There is hardly anything for sale. Matter of fact, I don't think there is a single property for sale that's within about a mile east or west of me.
I'm going to put your building up for sale too.
All right, let's do it. The right price is a seller's market, right?
Yeah, definitely. So all the listeners out there, if you're thinking about getting into an investment property, please call us. Let us sit down with you. We'll take a look at whether you're thinking about buying or selling, whether it's a 2-flat, 4-flat, bigger apartment building, or it's commercial property. We will sit down with you. We will put our team to work for you and determine whether or not that this is a good time for you either to buy or sell. And we'll look at the return on investment on there too. So we'll be able to help you out with that as well. So definitely, check out our website at CREN.biz. And you'll be able to get a hold of any of us too. But contact me. I'd be happy to work with it too. Kev, you got a point?
Yeah, Ken, thanks. I see that often is some people are frozen. They're interested. They do a little bit of research, but they don't know who to ask or what to ask. And that's okay. I mean, that's, people don't buy properties all the time. So, again, if you're unsure, you have a goal in mind, but you don't know where to start or what to ask, call one of us. Contact us, one of us. We'll definitely get it going, put you in the right touch with the right people, and we'll flesh it out for you.
Folks, just to touch on CREN one more time, I'd like to consider the Chicagoland Real Estate Network like a library. You don't have to know where every book is or what's in it, but you do have to know where it is when you need it. And if you go to our members directory, you can find, it is a network of real estate related professionals with you, the homeowner, in mind. If you need an appraisal, if you need a handyman, if you need concrete work, HVAC, design and build, financial planning, real estate, law, mortgages, insurance. I mean, it's just to mention a few. We've even got website designers, property tax consultants in this network. So please visit the website at www.cren.biz for more information.
Cool. Well, we're going to take a break right now. This time is 12:43. When we come back, Tommy Brennan from All-in-One will be joining us too. So with thanks Caliber Home Loans for sponsoring this segment. You're listening to Chicago Real Estate Beat, brought to you by the accounting firm of DeAndre and Associates on WJOL, Will County's News, Talk, and Sports. We'll be right back.
Graylick Insurance Agency is an independent insurance agency representing several companies in auto, home, commercial, and workers' comp insurance. The cornerstone of our agency is our ability to tailor-make policies and provide insurance choices with top-rated insurance companies. The Graylick Insurance Agency is your one-stop resource for all of your insurance needs. We put you first and work within your budget. Contact us today at 773-284-7650. GraylickAgency.com.
Houbolt Real Estate is your full-service real estate brokerage firm. Whether you are buying or selling residential or commercial, Houbolt Real Estate can help you obtain your goals. With over 25 years of local expertise, Houbolt Real Estate has the knowledge and expertise to deliver your desired results. Our team has been exceeding the goals of families and companies since 1991. Call today to put the Houbolt Real Estate team to work for you. Call 708-220-7613 or check out HouboltRE.com. Houbolt Real Estate will exceed your expectations.
I'm Carol McAllen with 1340 WJOL's Community Calendar. The Plainfield Junior Women's Club will hold a meet and greet for new members Thursday, August 24th at 7 p.m. at Nevin's Brewing Company, 12337 Route 59 in Plano. For more information, visit plainfieldjuniors.com. That's www.plainfieldjuniors.com. And the Oak Forest Firefighters Union 3039 fundraiser takes place Friday, August 25th at the Terra Room at Chicago's Gaelic Park, 6119 West 147th Street in Oak Forest, 6 p.m. to midnight. $30 admission includes entry into a grand prize raffle. There will be live entertainment, a cash bar, food raffles, and more, and all are welcome to attend. That's the community calendar for 1340 WJOL, Will County's News, Talk, Sports.
This is the Chicago Real Estate Beat on 1340 WJOL.
Welcome back to Chicago Real Estate Beat, brought to you by the accounting firm of DeAndre and Associates. This segment is brought to you by the Chicagoland Real Estate Network, along with Ray Gralick and Kevin Berry. I'm Ken Houbolt, and we're proud to welcome one of our CREN members to the show, Tom Brennan. Hi, Tom. How you doing?
Doing great, fellas. How you doing?
Good. Why don't you start us out by telling a little bit about your company, your background, and some of the things that you guys do over there at All in One.
Okay, we're a fully functioning design and build firm. We take a project from the initial stages, consultation, through the finished coat of paint. We do all the design work, handle all the architecture, pull all the permits, manage the project throughout the construction process, and then tie it up with a pretty comprehensive warranty, and we are a full-service boutique design and build firm.
Thanks, Tom. How you doing?
Specializing mostly in remodeling.
Thanks, Tom. How are you? This is Kevin Berry from Berry Law. How are you? Thanks for coming on today.
Kevin, how are you?
Good. I can speak personally. I just went through a kitchen renovation about probably 8 or 10 months ago. Can you give me an idea of what are some of the trends in improvements in kitchens and what it does for the value?
Well, specifically, we're doing a lot of kitchen remodels in the city, and what we're really seeing is expansions on the kitchen. Typically, we'll be in a bungalow or a Georgian, and we'll take out a bearing wall between the kitchen and what was once a bedroom, and we'll create a community space where we have a great room that communicates well with the new kitchen area. We're seeing a lot of that in the city where we're trying to gain real estate inside the house to give a more gourmet-type kitchen where you have amenities such as islands. We are using a lot of quartz now instead of granite. Custom cabinetry is becoming very popular now that the property values are coming back up. We used to do a lot of stock cabinetry that was keeping the prices down and allowing us to do kitchens at a much cheaper rate, but people are willing now to invest a little more in their homes.
Yeah, I always hear that phrase, the great room, and obviously that's what you're referring to as far as opening the wall up and creating one sort of community space, huh?
Yeah, and it's very important for people with small children, and it's older homes are so choppy. They were more bent on building a house with a lot of rooms as opposed to how you live in the space. So what we're really trying to do through room additions and through existing space in the home is to open it up and create more of a contemporary lifestyle.
And I think that's also important too. You mentioned about kids. I know when my kids were younger, it was nice to be preparing something in the kitchen, dinner time, and kind of keep the eye on the kids in the TV room, which would now you open it up, you get that supervision of what the children are doing.
Absolutely, and especially with computers and social media and everything, it's nice to be able to keep your eyes on the kids when they're on the computers or
absolutely
whatever they have.
Hey, Tommy, Ray Gralick here once again. Thanks for being on the show and also a member of the Chicagoland Real Estate Network. I've got kind of like a two-part question for you. First of all, you're hearing a lot of things that, bathrooms. What's hot with bathrooms right now? And to back that up, I'd like to find out, is it, a good time? Is it fine for me to want to remodel a kitchen or a bath before the holidays, being that it's almost September?
Yeah, Ray, that's a great question. It's the end is nigh, let's put it that way, as far as getting a kitchen or a basement remodel done before the holidays. Anything that we have to pull permits on are going to require architectural drawings and are probably going to put us right up at the edge there. I'd say we have another window of about 3 weeks to start the process and still get something in for the holidays. Probably one of the bigger trends we're seeing in bathrooms is, in a lot of bathrooms, we're taking the tub and building a walk-in shower. We don't recommend it if you only have one bathroom in the house, because you do need a tub for resale value, from what I understand. But that second bath or that master bath, we are taking out the big soap tubs, and we're doing full 3x5 walk-in showers with steam units.
You know, Tom, when we were building our home, we had our kids' bedrooms across the hall from each other. And that bathroom that was in that area of the house had a Jack and Jill sort of double sink and a separate shower and toilet area with a door, so that if I have a son and a daughter, is that still something that people are doing now? Is it a hot way to, if you have young children, that you want to do that Jack and Jill setup?
Absolutely. We typically do that more on like you said, you did it as part of new construction. We'll do it more as part of a room addition and incorporate it into the new space. It's kind of hard to retrofit that hall bathroom to 2 existing bedrooms, but anytime we're doing a room addition that is adding a couple bedrooms for the kids, we try to sneak a Jack and Jill in between them.
Hey, Tommy, can you give a client a good idea of what their project will look like prior to construction, meaning, more than a floor plan or a blueprint?
Yeah, if you go to our website, www.allinonepm.net, you can see what we offer. By being a full design and build firm, we take the time to draw three-dimensionally model the project for you. We present it to you on our laptop with the state-of-the-art software program. I could literally have you stand in your kitchen and say, this is what it's going to look like looking into the new family room or looking into the existing living room, and take the roof off the house and give you a virtual tour of the whole house. If we're doing any types of room additions or exterior alterations, I can show you exactly what that place will look like, what the roof lines will look like. It's a comprehensive process, but we don't know any other way to make sure everybody's on the same page. Anybody can look at a set of floor plans and pretend like they know what they're looking at. But when you model it and you look at things three-dimensionally, everybody has a good idea of what's going to happen. And quite frankly, it's the new expectation of any type of reputable firm. I mean, HGTV has changed the game there with the way they present stuff.
Tom, I think that's huge, because I know the average homeowner, and probably ourselves included, it really probably sells itself to see that, virtual tour type of thing, to see what the final result's going to look like. So I'm sure in your business, that's the hot thing.
Yeah, I mean, sometimes we have the anomaly where we get brought in after the architect, and they've already done some design work, a lot of design work. A project we're working on in Edison Park right now comes to mind. We took the architectural plans, and then I drew the plans and presented it to them three-dimensionally. And there were so many changes made based on my presentation, because they admitted that they had no idea what they were really looking at it with the blueprints.
And that's going to save them some money when you can change it on the computer, as opposed if you already started the project and you had to rip down a new wall or something like that, correct?
Amen. Amen. As much as we can get out on the front end, you are preaching my language there. As much as we can handle on paper before we get tools out there, it's going to be better for everybody.
Tommy, I've known that your company has come in, to kind of pick up the mess that somebody else left behind. And I know that when people go to your website, they can see before and after pictures of, the work that you guys do and all that. And I do know you do great work. And, it's interesting that when you talk about, going in there and trying to do a project before the holidays, that, hey, you got to build permits, you got to do a lot of stuff. It just doesn't happen overnight. You got to know what you want. It has to be, blueprinted, planned out, and, you got to pick a lot of material and all that stuff. Very interesting stuff.
Tom, I know all the things we talked about are real good. It's going to come down for the homeowner is price, budget. So we're not all millionaires out there. Most of us are
except Ray Graylick. He's
there he goes again with that talk.
Most of us are thousandaires.
I'm just here for everybody over to you guys.
So for a homeowner who doesn't have a huge budget, what would you suggest as far as maybe not going to full out tear down everything else down to the studs as far as a kitchen or bath? What would you recommend?
Well, that's a great question, and we base our everything first on needs, then on wants. So if it's the space, let's create the space, and then we'll populate it with whatever we can afford to populate it with. If it's truly the kitchen, if you're turn around doing a kitchen and a bathroom, but you only have the budget for one, do the kitchen. I mean, that's good where you're going to get the most function out of it. And everybody is different as far as their needs and wants go, but we work with everybody to get a budget. We do provide a fixed budget, too, by the way. We don't just go in there with random price and say it might be within 20% of this price. We try to take as much of the unknown quantities out of remodeling on the front end and give you a fixed price based on, some problems you might have with electrical, plumbing. Any one of these FHA loans that Timmy offers all require contingency reserves in case there's any type of issues. But my recommendation to people right now is homes are going up in value. Money is still relatively cheap. Take out as much as you can handle before, rates go up and before construction costs go up and maybe before home prices stabilize again.
Tom, it's good to hear that, your firm will go out there and give a fixed price. Obviously, that's one of the nightmares out there with a lot of construction companies that go out there and, talk a big game and, have somebody real feeling good about what their house is going to look like. And then all of a sudden they're 30% over budget and they're trying to figure out where they're going to get the money from. That's awesome that you guys do that. And, if you can, please tell the listeners how they can get a hold of All-in-One Remodeling.
Probably the best way to get a hold of us is look us up on our website, www.allinonepm.net. You can follow us on Twitter. You can like us and share us on, on Facebook. And your first point of contact will be TJ Henson. He'll be the person that gets your requests. We like to get them online as much as possible. And he'll be your first point of contact, and he'll start the process for you.
Well, Tom, thanks for joining us today. We appreciate you, too. So that's All-in-One Build and Design. Check them out. They're also available on CREN.biz. All Tommy's information is there, too. As always, thanks for being on here. Thanks for the good work you do, and thanks for helping out all the people that we've recommended to you as well, Tom.
Appreciate it, fellas. Thanks.
Take care, Tom.
Thanks, Tom.
It's good stuff, fellas, on there, too. He does nice work. I mean, whether you're just looking to just get your bathroom done, whether you're thinking about putting an entire addition on your house, whether it's moving it out, moving it up, he's the guy to call. That is huge. When you can sit in your kitchen, he can go on his computer screen and show you exactly how everything's going to be. That's fantastic.
It's interesting because a lot of people have an idea what they want their kitchen to look like. But then when you start to look at colors and schematics and all that, and maybe how big of a space you have, sometimes what you think you can place in that room just doesn't work out. And then that's when you can rely on somebody like All-in-One that can say, hey, wait a second, take a look at this or that. You don't like this, we've got that. And then now you know what you're going to get. It's a great company.
I know, Ken, you can attest to this, but there's two aspects of when you do home remodeling is most people just look at it and say, hey, I'm going to spend $20,000. It's going to increase my home value by $30,000, which is definitely a great consideration if you're selling. But also keep in mind that you may live in this house for 20 more years, and what kind of value does that put it in to have a nice kitchen, to have a nice bathroom, master bath? So keep that in mind, too. It's not only is it the actual dollar value, but what about, quality of life and appreciation of the property?
Yeah, absolutely, Kevin. Just piggyback off that. There's two different remodels. One you want to remodel because you're going to live there for 20 years, or one you're going to remodel because maybe you're going to flip that place. Mm-hmm. So All-in-One's a great company.
Yeah, and we do have, and within our network, we do have people who are looking to do, if you're selling your house and you really don't think you can afford or you can't do a full rehab, check out the website. We've got the folks that can come in and help you out and dress the house up and get it ready for the selling in there too. So again, I've been talking a couple times throughout the show today is that if you're looking to buy or sell property, we've got the team that can definitely help you. We're in the real estate game. We do it day in and day out. We've got, other than our CREN members, we have an extensive network of people that we deal with, like we said, on a daily basis. So we can help you. Whatever your situation is, contact CREN, CREN.biz. We'll be happy to help you guys out too. So that's pretty much we're going to wrap it up for the week. Thanks to our sponsors, Chicago Title, Caliber Home Loans, Chicagoland Real Estate Network, and the accounting firm of DeAndre and Associates. We'd like to thank our guest, Tommy Brennan from All-in-One, for Ray Graylick, Timmy Yanahan out on the golf course, Kevin Berry, I'm Ken Houbolt. Thanks for listening to Real Estate Beat on WJOL. Will County's News, Talk, and Sports. We'll see you guys next week. Thanks.